Hello, welcome back. If you've been wondering how to boost your credit rating, you've come to the right place. Your credit score plays a huge role in your financial health. So, let's get you in top shape by discussing the super important topic on how to improve your credit score. Your credit score is a three-digit number that represents your credit worthiness. Lenders use it to decide if they will give you a loan and what interest rate to charge you on the loan. The higher the score, the better your chances of getting favorable terms. Credit scores range from 300 to 850. A score above 700 is considered good, while a score above 800 is excellent. Knowing where you stand is the first step in improving your credit rating. If your credit score ranges between 300 and 579, it is rated poor credit score. Individuals in this range often have difficulty being approved for new credit and will need to take steps to improve their credit scores before they can secure any new credit. If your score ranges between 580 and 669, it is rated fair credit score. For individuals in this category, lenders may consider them higher risk and they may have trouble qualifying for new credit as well. If your credit score ranges between 670 and 799, it is rated very good credit score because you have demonstrated a history of positive credit behavior and may have an easier time being approved for additional credit. Individuals in this category are generally viewed lower risk borrowers by lenders. If your credit score ranges between 800 and 850, it is rated excellent credit score. Individuals in this range are considered to be low risk borrowers and may have an easier time securing a loan than borrowers with lower credit scores. You can check your credit score for free through various online platforms. Let us take a look at the various elements of your credit score. Number one, payment history. Your payment history is the most significant factor affecting your credit score. Lenders want to see that you can pay your bills on time. Even one missed payment can hurt your credit score. Consistent on-time payments show lenders that you're reliable and responsible with credit. To improve your payment history, set up automatic payments or reminders. Always aim to pay at least the minimum amount due and try to pay off your balances in full whenever possible. Your payment history is a clear indicator of your financial reliability, so keep it clean. Number two, credit utilization. Credit utilization is the second most important factor. It's the percentage of your available credit that you're using. A lower credit utilization ratio indicates that you're not over-relying on credit. Aim to keep your credit utilization below 30. For example, if your credit limit is 10,000, try to keep your balance below 3,000. To improve your credit utilization, consider increasing your credit limits or paying down on your balances. Avoid maxing out your credit cards. A high utilization can signal to lenders that you're financially stressed. Number three, length of credit history. A longer credit history provides more data on your financial behavior, which can positively impact your score. It's beneficial to keep older accounts open, even if you're not using them frequently. To improve this factor, avoid closing old credit accounts. If you're new to credit, be patient. Your score will improve as your credit history lengthens. A longer credit history gives lenders a better picture of your credit worthiness. Number four, credit mix. Credit mix refers to the variety of credit accounts you have, such as credit cards, mortgages, auto loans, and personal loans. Lenders like to see that you can manage different types of credits responsibly. Ensure to manage any new credit responsibly and avoid taking on credits you can't handle. Number five, new credit inquiries. Each time you apply a new credit, a hard inquiry is made on your report. Too many hard inquiries in a short period can negatively impact your score. Lenders might see this as a sign that you're seeking too much credit at once. To improve this factor, be selective about applying for new credits. Space out your credit applications and only apply when necessary. Multiple inquiries over a short period can harm your credit score, so plan your credit needs carefully. Now that you know the factors affecting your credit score, here are some tips for maintaining a healthy score. Number one, pay your bills on time. Paying your bills on time is the most important factor in boosting your credit score. Late payments can significantly harm your score. Set up reminders or automatic payments to ensure you never miss a due date. Consistent, on-time payments show lenders that you're reliable and responsible with credits. Number two, keep your balances low. Maintain a low credit utilization ratio by keeping your balances below 30% of your credit limit. High utilization can signal to lenders that you're over-reliant on credit, which can hurt your score. Number three, limit hard inquiries. I mentioned earlier that each time you apply for new credit, a hard inquiry is made on your report. Too many hard inquiries can lower your score. So, be selective about applying for new credit and space out your applications. A few inquiries over a short period can be less damaging than several in a short period. Number four, monitor your credit report. Regularly check your credit report for errors or discrepancies and dispute any inaccuracies such as incorrect late payments or accounts that aren't yours with the credit bureau. Correcting errors quickly can boost your credit score. Number five, negotiate with creditors. If you have late payments or collections on your credit report, try negotiating with your creditors. Sometimes they'll agree to remove negative marks if you settle the debt. This can clean up your report and boost your score. Ensure to always get any agreements in writing as well. Improving your credit score takes time and effort, but it's definitely worth it. By understanding these elements and managing them wisely, you can build and maintain a strong credit score. A higher score can save you money on loans in terms of lower interest rates, insurance premiums, and generally open doors to better financial opportunities. Start implementing these tips today and watch your credit score rise. If you found this video helpful, you can subscribe to the channel for more personal finance tips. It's free. Click on the subscribe button right now. Drop your questions in the comment section if you have any. If you would like to know the steps for disputing errors on your credit report, let me know in the comments and I'll make another video on that. Let's support each other on this journey to financial health. Let's build wealth together. See you next time.